Assalamu alaikum. You're watching Views and News and I'm Faisal Rehman live from our Islamabad studios. Today we'll be talking about the economy of Pakistan, in particular the capital market. I'll just read out a few of the statements of Dr. Abdul Hafeez Shaikh Saab, who is the Finance Minister of Pakistan, and in particular he talked about the current standing of the Karachi Stock Exchange or the Pakistan Stock Exchange. The KSE 100 index, he said, is up by 14.9% in 1 month, and that month was the November. Highest 1 month return after May 2013 since 16th August 2019. The index increased by 36.6% or equivalent to 10,500 points. The strong rally in the stock market shows increasing investor confidence on stabilization measures taken by the current government. Well, we can say that the stock market's bulls are not fatigued yet, though it seems that this bullish trend is going to continue not only in this coming week, rather the last month of the year too. At the same time, Dr. Abdul Hafeez Shaikh further mentioned that Moody's, when you talk about the Moody's, that is a credit rating agency, says it has upgraded Pakistan's outlook to B3 stable. Now, B3 stable is a current standing from negative. The upgradation of the outlook to stable is affirmation of government success in stabilizing the country's economy and laying a firm foundation for the robust long-term growth. This was also stated by the finance minister. Now, looking at the interesting part, since I've got a lot of data available with me, the stock market has actually reflected the investors' confidence, and it shows the direct relation. Though it went down a little during this issue of the extension of the Chief of Army Staff General Bajwa. But other than that, if you look at the banking sector in particular, whether you talk about BIB Bank or other banks, they have shown a very, I would say, remarkable growth. Services sector in particular. Cement sector, on the other hand, shows the construction side is also really improving. So those stocks also went up. And other than that, if you look at the top 5, so you'll find the cement, you'll find the services sector, especially the banking side. Also, another thing is very important, which should be mentioned, that over a period of time, since there was a lot of regulation on the imports have gone down, and the current account deficit has also shrunk. Our exports has also increased, says the Pakistani exports up by 9.6% in November 2019. So you can well imagine that this is a very important sign, almost 10% growth in the exports, and at the same time you have seen the import cuts, they are almost 17.53%. Now that's a very huge, and that is also in the month of November. So if you look at the overall equation, this is something very positive, and that is primarily one of the reasons that Moody's has in fact upgraded Pakistan from negative to B3. Revenue shortfalls, they have also grown to 211 billion, that's 211 billion. The government's efforts to uplift economy, rising unemployment levels in Pakistan, government is trying its level best to increase jobs. But this is not the actual job of the government. The private sector has to move in, and both need to work together in order to create more employment. Primarily, these are the major issues which we'll be talking about. Let me introduce you to our panelists. We have with us in our studio. On my right is Dr. Manzoor Ahmed Saab. Needs no introduction, is a former ambassador of World Trade Organization. Sir, thank you very much for taking out your time and being here. We also have with us Dr. Kamran Naki Khan, who's a senior economist and a strategist. Thank you very much. And we have with us Zia Bande Saab, who's the director of Prime Institute. Thank you very much, Zia Saab. Sir, first of all, Dr. Saab, I would like you to throw light on this aspect, because for many people, this rating concept is not clear. What exactly do we mean when we say that XYZ company or companies for that matter, they have the AAA rating or A+ rating for that matter, and the negative to B3, because Pakistan has been into B quite some time, so never been into A, I would say, but you can correct me if I'm wrong. How do we determine, sir, this rating, and what is the significance and the importance of, for example, Standard & Poor's or Moody's for that matter? So these rating agencies, how do they work? What do they look at? How do they calculate the overall strength of an economy? Sir.
Faisal, thank you very much. I'm not sure I'm the right person to comment on this, and both my colleagues on the right are in much better position. It's they give an overall rating based on the risk assessment. If a company is going to default, they would obviously. I mean, for example, this Moody's will start with AAA and go down to C, and depending on what risk is associated with that country or with that company, that's how they rate it. And so we are, somewhere in the middle, B stable. But you see, the minute you go down in rating, that means if you want to borrow money, it's more expensive. So anyone wants to come to your country for investment, they are more careful. I mean, that shows the trust on an economy or on a company, any company. So this is, in general terms, this is how it is. And there are 3 or 4 rating more well-known companies which do the Moody. You have taken the names already, Moody's, Fitch, and S&P. So, and then we also have, for example, in Pakistan, we have our own rating companies, a couple of rating companies.
Sir, I remember, let me put this question to Naki Sab. Sir, if you remember this recession of 2008, and that was pretty bad. Whatever the reason was, primarily about the housing and then the overstretching of the banks, and eventually it resulted, despite the fact that more than $700 billion were injected, still it couldn't work out. Somebody told me in a very simple way that, for example, if there is a house worth $1 million, and suddenly somebody comes up to you and says, well, there is a category 5 storm coming in, it's going to wipe it out, wipe everything off. So would you like to sell your house to me? So a $1 million house, which you will see that, is going to be, it's going to create a lot of destruction, and you end up selling it for 100,000. So something of that sort happened. But now, sir, let me rephrase my question and put it to you, sir. That when you look at these rating agencies, what is the criteria? Obviously, the stability of the currency. I'm sure about the loans, the borrowings, how the company is, or the country for that matter, is working, is performing. There are multiple factors, so multiple, angles to look at it. So your take on this part.
Yeah. First of all, when we see this perspective from the capitalist point of view, the prime view of the firm is profit maximization. So profit maximization, so they invest in a number of places so that they can have minimum cost and maximum profits. And so in order to achieve that, they see where to invest outside. If it's companies operating from parent companies in USA, then definitely they will look for the opportunity for investment and production and so on and so forth. Presently, like Bangladesh, they consider is one of the economy where they should invest, and in the garment industry or the textile industry. Many other firms are, so they can.
Interestingly, Bangladesh has the second largest textile setup after China.
Yes, $37 billion.
Oh yes, indeed.
So apparel market is about 46 billion US and Europe, and approximately Bangladesh is taking approximately 66% of that particular chunk, Bangladesh. So coming back to the rating, so initially that was the prime factor, that was the financial perspective. Now then stakeholders perspective came, what they were considering only. But the prime view is the investors' confidence should be there, so that they should invest on the shares, they should invest on the stocks, and so that profits should be maximized, and this is the prime view was. Then their social index is also not taking care of, that is also very important. Okay, why socially responsive stocks are important now for investors also. So like IKEA is not a company, it's a family-owned company, but other companies also, so that is also an important factor. Then Global Competitiveness Report also indicates 12 pillars of competitiveness. They divide countries into 3 economies. One is transient economy, one is efficient-driven economy like China, and transient economy like Pakistan, India, Bangladesh. They are not efficient-driven economy in total terms. Then there is an innovation-driven economies like Japan, like Germany, like USA. So first, there are, according to that pillar, what is the number one is state of the institutions, how much institutions are strong. Second is infrastructure, macroeconomic stability. then socioeconomic conditions of the country, then health indicators, then education indicators. So there are
multifaceted basically.
yeah, these are the two efficient labor market and so on and so forth.
Interesting.
And so these are the 12 important pillars on the basis of this ratings have been modified. But 20 years ago, mostly it was on the basis of financial terms. So this is the way company the job of the government is to create an enabling environment so that a company can company can compete on those markets on the basis of that enabling environment. So the job of the government is to create enabling environment. It is not the job of the government is not to fight for the trade. It is the job of the
Private sector.
Private sector. That is what important.
Very interestingly explained.
So when we come to the Moody, Standard and Poor's, they are an economist intelligence, and there are other also. And also government agencies also, like CIA has its own also they give a financial reporting system, and every country has. So they also prepare intelligence reports also. So on the basis of all these data collections, these Moody and Standards, they are specialists in examining the state of the investment, where you should invest.
Okay.
This is for the investors. So in order to safeguard the investors' money, they independently give their view whether if you're investing in the stocks and that the stock is invested in Pakistan companies, some of the shares, some of the chunk is invested in Pakistan, what is the viability of getting the dividend, and what is the viability of the.
I mean, this is the kind of I would say options the government is providing
Yes.
to the investors. And moving on to you, Pandey sir, now looking at a couple of areas. For example, I still remember there were so many companies, they were rated as AAA, 2008 I'm talking about, and the next morning they were bankrupt. So there has to be some sort of a flaw somewhere, sir. I've also heard that there is a lot of corruption there as well. People literally buy the ratings of their companies, buy the rating of their countries also. Is it true, sir?
At least I can talk about the companies, not about the countries.
There you go, sir.
When we are talking about the companies, in US,
Lehman Brothers, for that matter, if you
Lehman
remember, sir.
Brothers,
there were so many other, some
many,
big
many.
houses. Even Enron.
And
so
Enron was the first case.
First
in
case.
Yeah, I
like
remember the logo of Enron was also so.
Yes.
what is important for you to understand that how is the system works over there in the rating side. How the rating companies make money. They're not doing this rating money out of
That's
blue,
exactly
okay?
what my point is, sir.
So if you're going for a corporate, and in US, these companies which are multi-billion enterprises, they raise a lot of debt, they go for a lot of bonds. So it means that they have to get these ratings from these companies. Now this is a lot of business which is going on. And as far as the rating,
Better the rating, the higher the value on the bond.
the bond value and your rate of the interest will be low for that company also. So it means the materiality for that company to buy off a credit rating is much lower than the money it will be saving on the lower interest rate. Now, as far as the rating analysis is concerned, they basically go for futuristic thing. I mean to say, if I'm analyzing your company, so what I'm doing, I'm making a financial model.
Okay.
That going forward, what sort of stresses which will come over there and how this company is going to perform. Now, what happened in US when you are telling me that these triple rated companies went down, it happened like that if you are debt driven company and the rating agency is basically banking on this, that
So
you will
does
be-
it mean that you have overstretched, or rather you have overstretched beyond your capacity to control it, right?
Exactly. And why the rating agency is giving them a higher rating? Because they believe on this, that this company is going to arrange the money. That's the point. I mean to say, even the country goes down, what's the problem in the country also? Is the same as for the company, that if I give you a higher rating and something goes wrong in the system, somewhere your certain targets are not met and certain people don't give you the money and you don't recover your money, something goes wrong, so your rating will go down. It's not, I mean to say, it's not only technical or you can say mathematical. There are a lot of other factors which affect your ability to raise money from the market. If you look at these Moody's,
So primarily when you, I mean, it's the brand, is the trust of the people. Are there multiple angles to it, right?
Yeah, when you're looking at the Moody's have with two ratings. One is the local currency and second is your foreign currency, both the ratings. Now, Pakistan is under the IMF program. It means that Pakistan is basically following the same prescription which Moody's is also looking that's right for the country.
And the parameters of all these different rating agencies are the same, sir?
Obviously, I mean to say, you go and get the rating from both the agencies. So go for S&P, go for Moody's.
For example, if this
There will
particular
not be a lot of
company,
difference.
Moody's, it has raised the rating of Pakistan from negative to B3. So that means that even S&P at some stage is going to rate us there.
Obviously, when
It is automatically done, sir?
No. They have their own processes where they goes into it and they work it out. It is just like in Pakistan. In Pakistan, we have two rating agencies. To go and get the rating from any of these agencies, JCRVIS and the second. So your rating will be, I mean to say, in the same range, because the models which they are using, the financial models which they are using are quite similar. Okay. So it means that the outcome will not be that out of point when you're talking about two different rating agencies. The similar things goes for the countries also. It is not like that Moody is going to give you a A rating and S&P is going to give you a C rating. It doesn't work like that because they are focusing on the same things, on the same areas. But the point is this, you have that collective amnesia also. When everything goes down, what we have seen in Greece also, we have seen in Chile also. It happens, the same
Argentina, Brazil.
Argentina. So we have seen this. That's not something that you should take it as a Bible, that this is something which, and the people who are investing in your businesses, they're not only looking at the ratings. There's so many other factors also which they are looking into. And especially countries like developing countries, like emerging markets. Emerging markets are a very different animal as compared to the markets which we are talking about, developed markets. In terms of entry, in terms of exit, in terms of barrier to business, they are very different markets. So I mean to say, if I'm sitting in you, for example, if you look at even the market capitalization, look at the market capitalization of New York Stock Exchange. It is about $22 trillion. It is double the size of the American economy. Okay. If you come back to Pakistan has a market capitalization of 47 billion. It is about below 1/6 of your economy. If you look at Indian stock market capitalization is almost equal to its GDP. Look at Indonesia, it's over 60% of its GDP. Now these are very important factors to understand.
And what does it tell us?
It tells us the liquidity of that market.
Okay.
It tells us, for example, I just give you an example. I was here in Islamabad last week. We were talking about these startups to raise money from the stock market, because startups were coming and they were saying they have a lot of difficulties. I was sitting in that focus group discussion and I did ask them, but they were talking about that SCCP has recently introduced GEM, a new index for the startups.
Okay, for the startups.
For the startups. For the stock exchange, they have made the rules. And I was just coming that when I was recalling it, that why SCCP is doing it. It is the job of Pakistan Stock Exchange to do it. I mean to say, you look at Indonesia, they have acceleration board. It was done by their stock.
But this is a regulatory body, sir.
The point which I'm making, that your stock market, if you're banking on it for fundraising, effectively stock market's number of companies have reduced over the last 2 years. It was 559, it has gone down to 534. Now those are the issues which you need to see. You are happy and looking at the numbers, but you're not looking at the story behind the numbers.
Particular companies which have shown tremendous expansion, sir? That is again something positive.
Look, the exceptions are there. What I'm talking about a vehicle. I take stock market as a vehicle. For example, if I look in India, the NSE Emerge, which has been working, you know, in NSE Emerge in last 2 years, this is for the startups company, 150 company listed, and they have raised over 3 billion rupees. I mean, the small companies, they have raised 3 billion rupees in the stock market. Now that is what our point is, that when you're looking at the stock market, its main purpose is to raise money, not on the success. You're talking about banks. I'm talking about where the technology companies in the stock market. Where are our Alibabas or our Yahoos or our Amazon? Do you see anything like that? You're
No.
talking about innovation. Sir, have given example of innovation-driven economies. Look at their stock markets. Look at the Lee board on this Kuala Lumpur Stock Exchange, Acceleration board on Indonesian Stock Exchange, Chai Next on Shenzhen Stock Exchange. You will understand that how people are supporting innovation and the startups in their country.
Innovation is the name of the game, sir. And that's the reality. Now, coming to you, sir, since you've worked in WTO, sir, you were an ambassador there. Whenever these rating agencies, they improve your rating, sir, so normally whatever money we want to borrow in the future, let's say 6 months from now, maybe 8 months, and there is a period, you know, for example, if you're looking at $6 billion from IMF, for example, like two, you get 1, you get 3. So the next tranche, whenever it comes, do you believe, sir, that it is also going to be on a different percentage, or whatever they have decided earlier, that is going to be the benchmark, sir?
I mean, you see, the fact that they put Pakistan stable, so that means that there's more trust in the economy. That means we'll get better interest rate. That's obvious. You know, if the country is very solid, like say Switzerland and Germany, actually they don't give you any interest. They actually take some interest from you if you put in some money. So it's like that. Say Pakistan, I don't know what it is, but perhaps if they were to float a bond, they may have to give 7% or something like that. I mean, interest rate. Another economy.
Our bonds, Pakistan bonds are getting mature soon, I guess, right?
Yeah, yeah. They have to come into the market now.
7%. You see another country, if it has just to give 1%, 2% or something like that, you're talking about Greece. Greece had a terrible record, but recently they turned around their economy. And so
They
what
were
they
given so many bailout packages, sir?
no, there was.
Still,
But
poor people are
No,
paying
let me-
2%
no,
for
no, no.
NATO, huh? Out
No,
of
no.
their economy.
But let me explain. That is how the situation was. So the trust has returned. So what they've done is they had borrowed IMF money at a higher rate, and they have told IMF, they have given an application, we want to return your money because we are getting it at cheaper rate from the market. Normally, when you borrow from IMF, this is one of the cheapest. You know, for example, we get 0.5%, 1%, 8%,
And that
maybe
also
0%. Yeah, 0%. It's not very long term, not unlike World Bank, but still the percentage is very low. Now, the fact that Greece is able to return IMF money and borrow it from the market shows that, you know, their economy has improved.
It's improved.
Yes, yes. So if we were, for example, in such a position, I mean, obviously we wouldn't have to put up with so many conditionalities of IMF, etc. Do this, do that. If we were able to borrow on similar rates from the market, but we are unable to do that. I mean, that's one
Just
reason.
like an individual's, I would say, borrowing history or credit history, right, sir?
It is, yes, it's more or less same thing, but individuals is, you know, you go to a bank, maybe if you want a big loan or something, perhaps they look at your record, etc. But otherwise, they have a certain market interest rate, etc. And you know, you get. I mean, it depends.
Which is applicable for all across the board, right?
More or less, yeah.
But sir, one more point, sir. World Economic Forum. Now, that's a
Yeah.
very big body, I would say.
Yeah.
Every year they have this
Yeah.
seminar there. Not a seminar, that's a huge gathering. I mean,
Yeah.
everybody is there. You
Yeah.
name it, who's who. Normally, sir, it is also believed that whenever they issue a report about a certain country, they've done it for almost all the countries, in particular in
Yeah.
Pakistan also.
Yeah.
Sometimes when we hear that, you know, we used to be at 174 numbers and
Yeah.
now we have improved and we have improved by 6 positions and now we are 168.
Yeah.
So obviously they're looking at certain countries which are within that bracket, and then you sort of, you know, that's
Yeah.
how it moves.
Yeah.
Do you think that during the last, let's say 13, 14, 15 months, the economy of Pakistan, looking at the confidence and everything, it has literally improved in an actual way, sir? Or it's
Okay.
all about the numbers? Because people believe that stock market primarily is not the only criteria to judge the economic growth of a country, sir.
Okay, there are two very important or well-known indices. One is the World Bank doing business, where Pakistan recently made good progress, And the other one is the World Economic Forum's World Competitive Index. And so while we did well in that other one, this one actually we slid a couple of points. And this, what Nakisa was earlier explaining, that is what their rating is generally about innovation, about institutions. The most important is I mean, there are, I don't know, about 110 indicators, and then they're grouped into 12, major categories, and then every year they come. But somehow our competitiveness, maybe that's normally the data from the year before. So we actually slipped a couple of points. But that maybe we'll see it next year, how we do, it should be coming soon. On the other hand, ease of doing business, more on legislation, etc. What you have reformed, if you had 39 taxes, if you have brought them down to 32, if you have implemented some, if the business feels that they take less time to file tax returns, that's reflected. Those kinds of things are if it's much easier to get laxity, etc. Those are the kind of things that improve your doing business. Now this is slightly different. How your institutions are performing, how long it takes for your courts to settle things, etc. So let's hope it improves, but for the time being, it's about there.
It's
the
about
same.
Now, Nakisa, the current account deficit, that has shown a lot of improvement. If you look at I'm just going to give you the example of this year, of November. I mean, they have very categorically mentioned that the exports in this month, in November, increased by 9.6%, and the imports were cut by 17.53%. So primarily the focus was about the current account deficit. So we are trying our level best to improve our exports. Look at the currency, it's hovering around like 154, 155 rupees a dollar. And on top of that, there is one very important factor, and that is about the regulation on the import. Unfortunately, see, it has resulted in a few things. I mean, inflation is one. There is no consumer price index formula over here. I'm sure there is, but nobody's actually working on it. Whoever wants to set whatever price they can. Look at the prices of very basic commodity, that's a tomato. We're being sold at 340, 350 rupees, on an average 250 rupees a kg. There was nobody to determine whether it is about the demand or supply, or who is the person who does it, who fixes the price of any commodity. We do understand about the petroleum prices, we do understand about the gold or other commodities for that matter. There is a system. But sir, within the country, when you look at the micromanagement, that is something where we really need to work hard. Do you think, sir, that is another area? Because when you ask a normal man that, see, our credit rating is improved, he said, go to hell. Look at the prices of the basic consumer edibles for that matter, whether it's oil, whether it's fruit, vegetables, meat, bread, anything. Constant rise. Look at the inflation. It's not even coming down from the double-digit mark, unfortunately, sir.
Yeah. Number one, I will come back again on the competitiveness report. That is, number one is institutions. Fruition of democracy, I have said many times, lies in district governance. If district governance is not stable, so democracy is not stable. So that is first fundamental. And that is the root cause of the problem of number of issues in Pakistan. Number of governance issues and micromanagement. Number two is like tomato prices. We are just, all these commodities, agriculture commodities are not all weathers available. Definitely there is a weather conditions under that. There is a time period of harvesting and so on and so forth. Of course, tomato time period is not in the winter season. Of course, we have to import some from somewhere, or we have to curtail our demand somewhere. The problem in Pakistan is that we are making a consumer price index, but we don't have a commercial price index. What is the consumption rate of tomato in the commercial markets, like catering market and number of other areas where eating out behavior is exponentially grown, and all these products are then as an ingredients are purchased. Like I just give you an example of tomato ketchup and so many things. So it is, tomato is not only is a household product, it is a commercial product.
Absolutely.
And so as a result of this, we have no check and no balance, no data, what is the commercial demand of these kind of. And as a result of this, it is coming, it's very hard on the household to purchase at that particular price, because for the commercial people, it's a ingredient and they are making money on it. And then coming to, like, we have wedding ceremonies and so many governments have only allowed 1 dishes, but people are going for, we know it, 10, 5 dishes. There is also consumption of all these food consumptions are enormous. And then wastage
Wastage,
also.
oh.
Wastage
Oh,
is
yes.
too much.
Oh, yes.
So we have no control. If we don't have a proper district governance, we cannot manage this kind of consumption behavior of the society. So there is there is need of some check, there is need some education in terms of how to prepare our reserves and so on and so on. I give you one example. When my father was posted in Ankara, we were very small, and at that time I saw that in Turkey, people were used to prepare purees at home in large quantities to preserve tomato, because that the puree is a kind of, they were not anticipating that in the coming winter it won't be available. So this kind of, but this kind of habit is not there in Pakistan. So we have a different kind of habits. So this is what, coming to export and import, your question, and current account deficits. Yes, Pakistan has improved its exports, and there are two, three issues which are very important. Number one is interest rate. Interest rate is too high, 13.5%.
Oh, yes, highest ever, sir, I would say.
And it needs to be reviewed now. It's very Number two, when we are talking about Moody's and Standard & Poor, Global Competitiveness Report, second is macroeconomic stability. So it's mean that if interest rate is not going down, Moody report is, it seems to be stable, it's means that in the long term there is a potential in the market if it is carefully being managed. This should be the definition of stable, right? Okay, it needs to be carefully managed. Unfortunately, we don't have a long-term orientation. We have no strategic plan for 5 years or 10 years. We are just considering everything on an ad hocism. So they need a very
As a kid, when I was growing up, when I was in school, I still remember, we used to, it was Zia Zira, right, sir? And we used to hear about this Chhata Pansala Mansuba. Remember, sir?
Even our 5-year plan is...
There were so many plans.
12 5-year plan.
So what did we do? Did we actually capitalize on those,
I
sir?
don't know. The government has announced this 12 5-year plan, which was due in 2018. 2019.
So lack of consistency.
Lack of consistency. So uncertainty is there. Then second important thing is, one important thing is government has done one thing good. SARS program introduced 180 billion rupees they are investing on this, and then 50 billion on the electricity and utility subsidies for the poor class. That is good. All these are the good indicators that empowerment line will be improved in Pakistan at the poverty level. So these issues are, but the most important thing is we have not yet in the last 70 years moved to a export-driven strategy. First time the government is taking seriously this export-led strategy. Initially, most of the things we were discussing with the Dr. Mazur before the program started about the FBR dominance. I just asked him about the tariff reforms, and he said initially it was dominated by FBR. So everything was on revenue generations, on short term.
Even still
is still. So we have to have a clear policy for exporters, and we should, all the institutions should think that what should be our export strategy, whether it's FBR, Ministry of Commerce, Planning, Development and Reform, provinces, local governments, Chamber of Commerce, exporters. This should be our priority. Our if we are exporting, we are earning gold. If we are importing, we are selling gold. This is simple.
Good way to explain it.
Uh-huh.
Now, Bande Saab, over to you, sir. Looking at the current economic indicators, when they say that in the month of November 2019, the exports grew by 9.6%, are they actually comparing with the previous month or the November of the last year, sir?
It normally with the last year.
Last year.
With the last
So
year.
obviously, when you look at it, sir, so that was the beginning. That was the time when the PTI government took charge and they were getting to know what's wrong and what's right, and that's where the things started moving in the wrong direction. Rupee, for that matter, and so many other things. Now, do you believe, sir, that rupee is going to be stable, looking at the current scenario? Your exports and your import trend is going to be somewhat similar. And on top, do you believe, sir, in another 2 quarters, 6 months from now, things will be better? If we sit here, we four people, and we talk about the same issues after 6 months, do you believe that things would be better, sir? Have they picked up the right direction?
Actually, if I talk about the multilaterals assessment of the Pakistani economy, they're saying the next 2 years will be tough. The things are going to improve after 2021. Your inflation will remain high, your growth will remain low. These are structural adjustments which
Now,
are
sir,
going on.
you know what Moody's says, that the growth rate is going to be 2.9%, whereas IMF says it's going to be around 2.4%. So I fail to understand that 0.5%, that's huge. Where did that go?
No, obviously.
Is it about the data which is available to them or what?
No, obviously it is depending upon the weightages you are giving to different elements, different
Okay.
factors.
And it varies from company to
obviously to the analysis also.
Okay.
But you take it in a range about within 2%, 2 to 3% in between.
Okay, let's put it
All
that way.
these guys are
Okay.
coming in for the same. Your question is this, that where we are going and what we are looking at, that the Pakistan is already in the IMF program. So they are abiding by that. Irrespective, they miss certain targets, but they are abiding by that. Your exchange rate has gone down, you know that. You would foresee any further, I mean to say, depreciation in it? We don't know exactly right now, as of today. You're talking about exporters. Have they grown? Now, exporters were basically not used to this 25% of depreciation in 1 year. Okay, that sort of a thing. So it means that your machinery and your talent doesn't adjust that fast as the currency depreciated. It takes
Absolutely.
time. It takes time. It comes with a lag effect. And now I tell you very frankly, I'm into the meat side, so I have seen so many people entering into this business. So many people started doing export onto it just because of that currency advantage. Second thing which government is doing, which I believe it's a healthy thing, they are clamping down on real estate property. Now that is where the bulk of the black money resides in this country. The more you clamp down on that, that money is going to come in. Now this all thing is going with a lag effect. What, as Naki Saab is saying, the certain things which they are doing, you don't see their fruits in immediate terms.
Okay.
It's going to take some time. Economy works like that. Now that's why you give a government 4 years or 5 years down the road. Irrespective what you say that they were clueless, they doesn't know anything and whatever they are doing. After all, they are also rational players. They're not totally stupid. What they are working around, that we have to remain politically stable and we have to at least have a space of 4 years so that we can show to our electorate also what is the target of any political party in this country: to capture power and to retain power. So for that, they have to do something which every government in the world do. I mean to say, you take it in Greece or you take anywhere, everybody calculates that we have to take that step. The only difference which these people have is this, that they went with the flow of these neoliberal agenda. They went with the flow with that and they start working out. Obviously, when you're talking of a neoliberal agenda, we are not talking about 2 or 3 things. There are so many other factors. How you are basically aligning the political economy of the country. That is one of the factors. I mean to say, you do certain liberalization, but you don't alter the political economy. If you don't alter the political economy, your all efforts are going to go waste. So what I believe, they are also hitting at the political economy. So it means some new players will be emerging, some old players will be dying. And that's what we, in Schumpeter terms, we say a creative destruction is going to take place. Now, how good or bad it is, jury is still out on it.
Quick comment, sir. Do you think that product diversification as far as export is concerned is really important, is need of the hour, sir?
Obviously, Faisal, it's not going to happen overnight. I mean to say for...
There has to be a policy, sir. I still remember we used to have the textile policy, the trade policy, we used to have the agriculture policy. So many policies, and we used to talk and we used to confront and we used to learn so much from these ministers.
I mean to say, if we are still living in the 80s eras when we are talking of 5 years plan, 10 years plans, that era has gone away. You know that in today's world, people don't plan that much. It is such a fickle market. It is such a competitive market that you cannot even plan for a year.
Sir, once I asked this question.
Even then you plan to understand your business in a better way.
I will not take the name, but way back in 2004-05, I interviewed the deputy chairman of the planning commission. And I asked him, sir, just explain it to me that in year 2020, because 2020 was the benchmark, so 29 days are remaining in 2020 and we'll be entering. And he said, Faisal, it would be somewhat like Malaysia. You know, if you open your eyes, you'll see Malaysia. But sir, don't you think we have wasted everything? Last 1 minute, sir, quick comment from you and I'll wrap up.
Well, one of the things is that we didn't keep those policies. You know, our economy was growing at 7-8%. We were one of the fastest growing.
8.6%.
Yeah, 8%. But then everything turned upside down. One was the 2008 crisis.
Yeah.
The other was, uncertainty in the country. Third was whichever government came was very incompetent. So all those things. Had we been growing at the same, we were doubling our exports were growing at double digit, 14-15%.
I remember.
14, so we went from 10 billion to 20 billion. Had we grown on the same rate, we would have been like that.
Somewhere around 45-50 billion dollars of export.
At least 70-80 billion. We would have. Yes. But from 2008, we shut ourselves in. We put a lot of regulatory duties, everything, and we ruined everything. Whatever was
very unfortunate, sir.
Yeah.
Very unfortunate. But anyway, since I was told that I should better wrap up the show, sir. Bande Saab, thank you so much. Nakis, it was a pleasure having you, Dr. Saab. It's always great to have you, sir. And that's all we have for this time. Inshallah, I'll see you tomorrow. Till then, take good care. Allah Hafiz.